Ibububu FX, Silon Njala, Sbulali Poverty. I already know what it is. Without further ado, ladies and gentlemen, let's get right into it. This is the current range that I'm looking at. NQ, Dow Jones is right down here, below the 50% of this previous leg. NQ, we're right up at the top, like we're right here. Then we also have ES. We're almost at the 50%, but not so much down here. So I want to see S&P 500 and NQ get in sync with Dow Jones and come down to this portion of the previous leg. Yeah, there's a 4-hour precision candle right over here. That 4 a.m. candle. This is an up close candle, and at the same time we've got daily sequential SMT. Yeah, what's up, Johnny? There's a PSP 4-hour. Got the premium wicks and the discount wicks. So the things that are in my mind right now is liquidity, dispersal, theory. I want to see S&P 500 and NQ get in sync. Yeah. There's the 7 a.m. candle, up close candle. We've already swept that high of that candle, so maybe I might have missed this. Here it's a down close candle. We failed to sweep that high, so the point where I should have entered, like, price is like so far away from that place right now. So there's SMT, 4-hour PSP. Ideally I would have liked to enter over here. I'll show you where I would have liked to enter. This is precisely where I would have liked to get my entry, right here. This is where I would have liked to get my entry, and price is just going down. If price doesn't retrace to give me another chance, I don't know. Hey, drinking alcohol is not good, man. So I might have missed it, but I might have not. Price might be eluding me right now, being confused. We've got that shift over here, the inverse fair value gap, so we might not see price go back up to this location, this point right here. We might not see price come back, but if price does come back here, then I'll be looking to get my shift in market structures. You know, maybe this is the shift in market structure. Maybe we should be entering here. I don't know, but yeah. Okay, so yeah, price is at the level that I needed to be at. Now I just need the drill to go on. There's we'll find G somewhere in here. R is the initial leg. That's where I'm officially going to be invalidated for London session specifically. So this is what I'd like my setup to look like. If my fair value gap is not on the 5 minutes, I'll definitely find it on the 1 minute. And yeah, so these are the levels that I'm just waiting to break. Oh shit, it's just going higher. Yeah, now all I do is just wait. This level could break, could retrace into this inverse fair value gap and travel, or it's going to come down, break this, come back into these levels, then travel. But if it shoots past this, then I'll just be waiting for the shift in market structure. All right, so this is what we had going on. We had SMT down here. We had Dow Jones trading way lower than NQ and ES. So we wanted to see NQ and ES get in sync and come lower. And so that happened. In the London session on that day, the setup got invalidated. I was waiting for a shift in market structure right about here, but it got invalidated. So we needed to see that happen inside of the New York session. All right. We'll go straight to the 1 minute time frame. Why the 1 minute time frame? Because the 5 minute time frame was not presenting any fair value gaps on that day. Okay, so this is where it officially happened. We had our shift in market structure and a return into the fair value gap, hence this entry right here. And this was also anchored by a 1 hour precision candle. On top of that, this was the third standard deviation of Monday's price action, because yeah. So we saw price go lower and draw right back to the smaller SMT. This was our magneto effect in play, and as well as liquidity dispersal theory. Yep. So we saw price come down and draw right back to our level.